Good morning, everyone. Welcome to this revision class, early morning revision class of a very engaging and important subject, that is cost and management accounting. And in this subject, today we are going to revise the most basic output of costing process, which is the cost sheet. Now, see, students, as you all know, when we are doing any accounting, maybe financial accounting, management accounting, cost accounting, any accounting's end result is the report. Now here, the report which we get from a cost accounting function or cost accounting process depends upon the purpose and depends upon the goal with which we are doing cost accounting. As you know, there are 5 broad purposes of cost accounting: ascertaining cost, fixing price, cost control, cost reduction, helping you in decision making, and also ascertaining profit of each activity or product. Now, depending upon what is your purpose, the end result is designed, the end report is designed accordingly. But the very first and the very basic report, which is the first, you can say objective also, and first approach also to cost accounting, is knowing the cost, ascertaining the cost, and this is done by the format, by the report called as cost sheet. So like how we have balance sheet as the end result of our financial process or financial accounting process, in the similar fashion, the report that we get as a result of your cost accounting process is the cost sheet. So basically, cost sheet is a report which provides a detailed outlook about how the cost of any product of goods or service has been determined, what are the various components, and what is the interlinkage between the various components. Now, when we talk about cost sheet, depending upon the nature of business, the industry in which you are operating, and the product, that is the goods or service, the cost sheet format differs. Right now, in this topic of cost sheet, which we are dealing with today, the format is majorly designed, as you can see, for a manufacturing activity. So this cost sheet format is not applicable to service sector. It is exclusively applicable to a manufacturing activity. Now, when you study this cost sheet format, you will realize a beautiful flow of how the cost is determined and presented for the purpose of your further cost ascertainment, decision making, and even price fixation. So if you observe the flow, how the flow is designed in this cost sheet, the flow is designed by visualization of the process through which the raw material will ultimately reach the customer. If you keep this logic in mind, remembering the flow of cost sheet, the format of cost sheet is very simple. So in case of a manufacturing entity who is manufacturing a final product and selling it, how the flow will happen. So visualize, the very first step is that the raw material is brought into the factory and it is consumed for the production of your output. How it will be used in the factory to convert it into final product, that will require the involvement or application of the direct labor force, who are the workers working in the factory directly engaged in the manufacturing process. So this will make up the first step in cost sheet, that is deriving the basic cost of that product. Now, interestingly, the terminologies used in cost sheet may appear to you as very technical, but if you understand this logic and flow, understanding and remembering the cost sheet format will be very simple. So, as you can see, the flow of cost sheet is you start with the raw material consumed. Now, how do you derive raw material consumed? You have opening stock. To this, you will add the purchases, and from this, you'll subtract the closing stock. So, broadly, these three represent your material stores. So, what was at the start of the day? Let us say day, maybe a day, week, or a period, maybe month or a year, depending upon how you are preparing this cost sheet. So, it is the opening stock plus what had further come in the form of purchases and less what is the closing stock at the end of the day. So this is nothing but your raw material consumed. So first is what is the raw material consumed in this final product? To that we add the labor cost. We call it as the direct labor cost. We call it also as the manufacturing wages. We call it also as the direct wages. So this is the workforce who is engaged in the production activity directly. Well, say, sir, what will be indirectly? So indirectly, which is not covered here, which will come down, is the workforce which is engaged in the process of supportive role. So their role is supporting the main force. So main force, which is also called as a direct labor force, is engaged in doing the production activity. So the production worker who is actually doing some manufacturing process is the direct labor, and the indirect labor who is playing the supportive role is who? The indirect labor are the helpers, the supervisors, the technical staff, the repairs and maintenance staff. So these are all the indirect labor force. So after direct material, you will add only the wages which is applicable to direct labor force or the manufacturing labor force. And again, how do we find out this labor cost? Now, as far as cost sheet is concerned, it is given, but in practicality, it is found using the concept of labor hours booked, which you study in the labor cost chapter, that there is something called as timekeeping and time booking. So on the basis of time booking, you get the labor hours booked on a particular job, on a particular process, and to that you apply the labor effective charging rate. Then direct expenses, generally in sums, you will find this very rarely. So out of 10, only 2 or 3 sums has this expense. Now, what is a direct expense? The simplest example is royalty on production. So many times, your product, which is a branded product, you are manufacturing it under the brand name belonging to someone else. So there is a direct expense associated with your product, whereby you are required to pay some amount or some percentage as penalty, sorry, as a royalty on the product. And this is the direct expense. Now, why it is a direct expense? Because it is the expense incurred for the production of the product. Without this expense, your product cannot be produced because it is a branded product or it is covered under some trademark or copyright. So that is where this direct expense of royalty will come. Now, these three costs, direct material, direct labor, direct expense, are the most basic cost for the final product. Without these costs, your final product cannot come into existence. Hence, these three costs together are referred to as prime cost. So prime means what? The most basic, the most important. So without direct, no product can come into existence. Hence, it is the prime cost. Now to this, we add the Again, see, understand the flow. This manufacturing is happening in your factory, that is the production area. Now we come to the indirect cost. So direct cost is the direct input going into your final product, which is in the form of material, labor, and the royalty. Now, to convert this raw material into final product, you require facilities. The expense relating to facilities is called as indirect cost or technically overheads in cost sheet. Now, what is the logic of overheads or why we keep indirect costs separate? Because direct costs are the one which are easily identifiable, linkable to your final product. So let us say I'm making this pen. This is my final product. Now, what will go into this pen is the direct cost, which is only for this pen is the direct cost. And that cost, which is common, which is like a facility which will be used for manufacturing this pen, which will be used for manufacturing other pens or other products, that becomes my indirect cost. So generally the common facility cost is the indirect cost called as overheads. Now, these overheads are then bifurcated into three categories as per the functions. First is the production, the other is the administration, the third is selling and distribution. So the total overheads of any business can be broken up into these three categories. Now, factory overheads deal with those overheads which are the facility related cost in the production area. So in the production area, the facility that you require, like the factory area, the machines, the electricity, and the other labor cost, which is not direct, that all comes in the factory overheads. So after taking the prime cost, we shall add to this prime cost those overheads, those expenses which are at facility level. And in that facility level, these are the expenses, these are the costs that are related to the production facility. So what is covered in this factory overheads? It will cover all expenses related to manufacture, related to production, except the direct cost. So even the direct cost is incurred in your factory. However, that is already covered in prime cost. So other than your direct cost, all expenses related to production manufacturing is covered here in the factory overheads. Now there are parallel terminologies used. We call it as factory overheads, manufacturing overheads, production overheads, or works overheads. So these are the parallel terms used for this. Thereafter, the total of prime cost and factory overheads becomes the gross works cost or gross factory cost. In this, you adjust what is there in the factory. Now, what stock is there in the factory? In a factory, at any given point of time, you will have the stock of those goods which are under manufacturing process, whose process is not complete. That is what is lying as stock. So visualize the students. The moment you are visualizing factory, the moment you are visualizing the work, understanding all these things will be easy. So in the factory, what is the stock available at any given point of time? It is of those final product which are still not complete, which are under production. We call them as work in progress. So again, to this gross works cost, you add opening WIP, you less closing WIP. So you get the final works cost or final factory cost. So it is like this: prime cost plus factory overheads. If you want, you can make an interim total of both these called as gross works cost, or you can avoid this total, simply prime cost, factory overheads, add opening WIP, less closing WIP, you get factory cost or works cost. Now, after this, now in today's scenario, the work that is done is automated, it is involving a lot of technology, and in order to be competitive in market, there is a lot of research going on. There is a lot of quality related work going on. Now, all these expenses are added after getting the factory cost of your product. Now again, why they are added here? Because again, if you observe, these expenses are incurred till the production level, till the final product comes into existence. These are required for the production only. Hence, they are added immediately after factory cost. So still your product is in production, you can say, and related to production, you have the quality control cost, the R&D cost, the administration cost of production activity, and most important, the primary packing. So your product, once it is completed, once it is made, the very first packing which is done over the product to protect it is what is called as primary packing. In our language, let us say you buy a chocolate. So the wrapper of the chocolate, the cover of the chocolate is what is the primary packing that completes the product. So in a factory, a production is completed, anything becomes a final product, recognized as the final product once primary packing is done. So again, visualize all these things are happening in the factory, and only with all these expenses, your production is complete, your final product comes into existence. So all these expenses added will give you the final product cost, which is called as cost of production. So here, at this point, your final product comes into existence. So you can physically see that, okay, this is the chocolate. So the chocolate with its packing done is called as final product. And the cost up to this stage is your cost of production. Now, in cost sheet or in costing rather, I should say, we have the logic of adjusting the scrap values. Now you have studied in different chapters by now because entire portion is complete. You are revising. Now you can connect it with other chapters. But in every chapter, whenever we were computing cost or cost per unit, we were adjusting the scrap value, the amount which we were realizing by sale of something. Now it is adjusted here whenever these scrap or these sales are considered as your normal loss, normal byproducts. So whatever you recover, whatever you realize from the sale of this normal loss, normal byproducts, that are adjusted by subtracting. So I'm sure if you recall your process costing, or for that matter, you recall any other costing chapter, wherever you have computed the cost in the numerator, you have taken total cost, and from that you have subtracted the scrap value of normal losses. Same thing in joint product byproduct chapter, wherever the byproduct value is nominal and it is the byproduct is considered at par with scrap, we used to do this, that we used to subtract the scrap value. Just sorry. So this byproduct or this scrap, we have always subtracted the values from our total cost. That is what is appearing here in the cost sheet as a less item. Now, if you visualize physically, your final product comes into existence at this point, where in cost sheet, we call it as cost of production. So this cost of production is made up of expenses of the factory, which is factory cost, which includes prime cost, plus works overheads, adjusting opening closing stock of WIP. This is your factory cost. To that, we have added all the costs which is related to producing the final product and incurred before the final product comes into existence. That is quality control, R&D, administration cost of production, and packing, which is primary. And in that, if there are any recoveries, realization, that is subtracted. So you get your final cost of production, which is the cost of your finished goods, finished product. Now, since this is final product, again we adjust the stock of finished goods here. So you have opening finished goods, you have closing finished goods. These stocks are adjusted. So when goods which are manufactured, that is produced, in that you add the opening stock and you subtract the closing stock, what is left is the goods which are sold. Again, this is simple mathematics. Even you can relate this with your accounting trading account. So when you're preparing trading account in your accounts, opening stock, which is of finished goods, whatever is produced, which is coming from your manufacturing account, so that is cost of production. On the credit side, you have the closing stock. The net of these three is the cost of goods sold. And when you compare it with sales in your trading account, the balance is the GP. So you can link this with the trading account to understand. Here in cost sheet, we are getting cost of goods sold. And in the cost sheet, in the trading account of accounts, we write the sales value directly. So what you get is GP, correct? Now, after getting the cost of goods which are sold, you now add to these the administration cost and the marketing, selling, distribution cost. Now, there are two types of administration cost. One, administration cost specifically related to production, and the general administration cost, which is for overall business. So if it is specifically related to production, it is added before cost of production. If it is general administration cost for overall business, it is added on the cost of goods sold. So this is something which you need to keep in mind. After adding the administration cost, general, marketing overheads, selling, distribution overheads, you get your final total cost, which is the cost of sales. Correct? So this is how, students, we have the flow. Now, while preparing the cost sheet, depending upon the requirement of some, you may have total cost and per unit cost columns. If not required, you'll only have total cost columns. If you want any working to be done, you can prepare one internal column and one external column for total cost. But cost per unit column will always be one. You have to compulsorily follow this sequence, this flow, and as far as possible, you should use these terms only. Now, before I go to the practical questions, if anybody has questions about the format or any of the pointers, you can unmute yourself, you can raise your hand, or you can put it in chat box. Once you are clear with the formatting part, we will go to the practical solving. Yes, anybody, any questions? No questions? Chalo then. Now, these are some questions which I have compiled. Okay, we'll take this one. Yes. Take a screenshot of the student so that you will have it for your reference also. Now, so you have to read and understand the question properly so that you will be in a position to rightly solve it. Now, see the format that we have seen is the detailed format. At this level, you may not be required always to do the detailed format. You have to do as per the requirement of the question, which may be limited. Now, what have they said? A factory which uses job costing system, the following data is obtained from the books: direct material, direct wages, selling, distribution, administration, factory overheads. Now, if nothing is given, you consider administration as general administration. This assumption you should keep in mind. Prepare a cost sheet indicating prime cost, cost of production, cost of sales, sales value. In 25-26, that is in the next year. So this was data of the previous year. So many times for preparing the cost sheet for the upcoming year, we use the data of the past year, which is concluded. The factory received an order for a job. It is estimated that direct material will be 480, direct labor will be 3 lakhs. Determine what should be the price if the factory intends to earn the same rate of profit on sales. Same means what is present. Also, that the selling and distribution overheads have gone up by 15%. The factory overheads is recovered as a percentage of wages, whereas other overheads are recovered as a percentage of production based on cost rates prevailing in the previous year. So you require two things. First is cost sheet of the present data, and then cost sheet for a new job which you are expected to receive. Chalo, 5 minutes I'm giving to you. You try out this sum, whatever you consider as your understanding of the sum, and then I will solve it after 5 minutes. Chalo. You may not be very formal with solving for the time being. Don't spend time in drawing using the pencil and scale. You can simply just start preparing the cost sheet, because for me right now, covering maximum sums is the target. So for that, let us focus on more solving. The decorative part can be left out. Sure. I'm switching to my notepad so that I can also parallelly start doing it. So that is why I've asked you to take a screenshot so that you can parallelly solve without being disturbed. If you have not taken, please take the screenshot so that you can also solve parallelly. See, in revision class, it is very important that you are doing a practical sum yourself, because that will help you understand if there are any doubts, misunderstandings, or queries. Very good. So start putting your answers. Very good, Naina. Kindly complete. Complete the cost sheet and find the total value beta. For this, the question requires that you have to maintain a certain percentage of recovery of overheads. So from the original cost sheet, you have to compute that overhead recovery rate so that you can continue that rate in the proposed cost sheet for that particular new job that you are expected to get this particular period. Fifteen, 9. Eight, 40. Cost of production is 42 lakhs. This comes to 20%, correct? Similarly, it comes to 25%, correct? Please cross-confirm the working students. Profit as a percentage of sales, how much it is coming? 1,000 divided by 73,000. It is 16.666% of sales. Correct me? So it is as good as 1/6, correct? Now, once I have derived my charging rates, I will use this to find out the cost of that new order. Now that they are expecting that your direct material, direct labor will be this much. And in this, they want you to earn the same rate of profit on sales what you are earning. Only one cost has changed, that is selling distribution overheads have gone up by 50%. So keeping these changes in mind, you have to determine the price of this new job. So 480 is material and 3 lakhs is the labor. Okay. So becomes 780 for prime cost. Now, how is factory overheads charge? 60% of direct wages. So here 3 lakhs into 60%, and there is no increase or decrease in factory overheads. So it will be 180, that is 60% of 3 lakhs. So this will be 960, which is your cost of production. How much is administration? It is 20%. Cost of production, and this is 25% of cost of production plus 15% increase, correct? So now 960 into 20% will be your administration overheads, correct? So it will be then 960 into 25% plus the 15% inflation. So how much it will be? 240, correct? 240 and 15% in that, in 240. 36. So 276. Am I correct, students? Kindly confirm. Perfect. So this is 276. This will be 468. And 468 plus 960 is 1428. Correct? Now, profit has to be maintained as 1/6 of sales. Now, we all know in maths, if it is 1/6 of sales, it will be 1/5 of cost. Correct? So if it is 1/6 of sales, it will be 1/5 of your cost. Correct, na? So 285, 600. So my selling price for this particular job should be 17 lakhs 13,600. Right? Is this clear to everyone, students? Anybody, any questions in this? No, but Nancy, Naina, what they are saying, that 15% is the inflation. So inflation happens in the basic cost. Na? So 15% will not be of COP. See, COP ka 25% is your selling overheads. And selling overheads have gone up by 15%, means 15% of its original cost. So this is the cost of selling and distribution overheads. And 15% of this amount only, not of COP. Correct, beta? I hope this is clear. Perfect. So let us proceed then. Okay. Chalo. Again, take a screenshot, students. Now, what is the data? Construction is a leading engineering and construction company providing a range of infrastructure, industry services. They have been asked to quote for a residential building construction and also an industrial plant construction. So we have got these two projects for which you are supposed to give them a quote. Okay, now XYZ Construction has a policy to price all their jobs at budgeted total cost plus 50%. So profit margin is 50% of your cost. Overheads are absorbed on the basis of labor hours. Company believes that using ABC to absorb overheads will reduce the cost associated with RBC and make them more competitive. Okay. Now, what is the data provided? Now, the overheads of the company include supervisor costs, project planner costs, and property related costs. The total comes to 600 lakhs. For each of these costs, they have identified activity cost drivers, as you can see. Now, for a typical RBC project, how much is the material required? 5 lakhs. Labor required 1200 hours. Site visits are 2. Planning documents are 2. For industrial project, material cost is 12 lakhs. Labor hours are this much. Site visits are 10 and documents are 8. Labor rate is 100. What are you required to do? Calculate the cost and quote the price of both the projects using the labor hour approach, which we call as the traditional. Then again, calculate the cost quoted price of both the projects using ABC. Now, further, assuming that cost of RBC falls by 7% and price of IPC rises by 2% as a result of change to ABC, suggest possible pricing strategy for the two services offered. Additionally, suggest two reasons other than high prices for current poor sales of RBC. Okay, so this is more analytical type question. We will first do the practical part and then we'll go to the analytical part. Now, for preparing both the cost sheets, what is required is firstly calculating the charging rates. Now, under traditional method, the charging rate is based on labor hours as it is mentioned here. So traditionally, you are charging overheads using the labor hour as the basis. And in ABC, we use it or we charge it using the activity as the basis. Okay. Keeping this in mind, so what we should do first, students, is we should compute the charging rate. So how do you charge overheads? So first, in case of your traditional method, your charging rate will be overhead recovery rate, which will be per labor hour. So it will be your total overheads upon total labor hours. This is your first working, students. Under the ABC method, we'll do it activity wise. So activity, then the cost, which is called as cost pool, then the basis, which is called as cost driver, and then the activity cost driver rate, that is the charging rate on the basis of cost driver. Correct? What are the names of activities? Supervisor, project planner, property related. So supervisor activity, project planning activity, and property related activity. So we'll put down the cost, we'll put down the drivers, and then divide both these. So you'll get the activity cost driver rate. Correct, students? See, you have to solve first, huh? Because in revision, until unless you start solving and practicing, it won't be very helpful. Now we come to the main part of the answer. So main part of the answer requires you to prepare cost sheet. Firstly, using the labor hour basis, that is under traditional approach. Then again, cost sheet using the ABC approach. So part A of my answer is cost sheet, traditional method. And again, cost sheet, ABC method. Now here, what is our cost sheet format? It is particulars and then our two projects. So what are the names? RBC and IPC. Similarly here, particulars and our two projects. So the cost given are material cost, labor cost. Now when you are charging your overheads cost, here under traditional method, you are charging the entire overheads using the labor hours as the basis. So here you are simply charging overheads by this labor hours multiplied by your overhead recovery rate, which you have calculated. Here under ABC, you are charging it activity wise. So first activity is your supervisory, second project planning, third is property. So I'm putting those names. So second is correct. Now this will give you your total cost. Plus you have to add profit, which is at the rate of 50% of total cost. So you will get your sale price. The same thing will happen here. You will derive total cost plus add profit, which is at the rate of 50% of total cost. So you get your sale price. Correct? Chalo. Completed, students. You have 5 minutes to complete. You have to solve first. See, students, in cost sheet, it is very important that you understand the question, the format that will be used. So as we have solved a previous sum and we are solving this another sum, in every sum, depending upon the data, depending upon the requirement, the original cost sheet format, which we discussed, which we revised at the start, will get slightly modified. And now, as you are seeing, if you see the exam sums are combination of different topics. So in cost sheet, the previous sum was pure cost sheet sum. This cost sheet sum is also having a connection with the topic of ABC. So at exams, you should be prepared for handling multiple topic sums. So it may not be a plain straightforward cost sheet sum. So you should have that type of approach and attitude in exams where you will be able to handle the multiple topic sum in one. Chalo. 5 minutes I'm giving you. Should I solve if you have done something at your end? So first is we need to find out the overhead recovery rates. So your total overheads are 600, your labor hours are 50,000. So here it is, numerator 600 lakhs, and it is 50,000 labor hours. So this will be my charging rate. Have you computed, beta, the charging rate? So it is coming as 1200 per hour, right? Now, individually, 120, 80, 400 lakhs. 20, 80, 400 lakhs. What are the drivers? 600 visits, 300 documents, 50,000 hours. 600 visits, 300 documents, and 50,000 hours. Correct? So 120 lakhs divided by 600 visits, right? So it gives me 20,000 per visit. Correct, students? Then you have 80 lakhs, which is divided by 300 documents. So it gives me something 26,666 per document. Please confirm, students. And then 400 lakhs divided by 50,000 hours. So it gives me 800 per hour as the rate. So these are my rates. Now we can proceed with the cost sheet of both the projects. So here my material is 500, labor is 1200 hours. Okay. So amount is rupees in lakhs. Amount is rupees in lakhs. Okay. So it is 5 lakhs, 12 lakhs. So it is 5, 12, 5, 12. Labor hours are 1200, 2500, and the labor rate is 100 per hour. Correct? Twelve and 25. Okay. So 1200 hours, labor rate 100. So it makes it 1.2 lakhs. Correct? 2500 hours, labor rate 100. It makes it 2.5 lakhs. Same thing continues here. So my prime cost is 6.2 lakhs, 14.5 lakhs. Now, for overheads, I'll use the same labor hours and I'll multiply it by the charging rate. Correct? So it is 14.4 lakhs here and 30 lakhs here. Correct, students? Perfect. Now, here my rates are 20,000 for supervisory, then 26,666.66, 26,666.66, and 800. So these are my charging rates, students. That is the activity cost driver rates, 800. Now I'll multiply it by the respective drivers. So here the drivers are visits, here they are documents, and here they are labor hours. So 2 visits, 10 visits, 2 documents, 8 documents. So 2 visits, 10 visits, correct? And 2 documents, 8 documents. And then the hours, you already know 1200 hours and 2500 hours. 2500 hours. So this will be my overheads charge using the ABC approach. So it will be 40,000. It will be 2 lakhs. It will be 56,000 something. Second. Let me just double verify using my calculator so that there is no mistake. It is about 2. So it is something 53,000. 3333 and it is 2,13,333. Yes. Then this is 9.6 lakhs and this is 20 lakhs. So I get my total cost 6.2 plus 4 plus 0.533 plus 9.6, 10, 16. So here I'm getting students 16 lakhs 53,333. Half of this is the profit. So it will be 8.26666, right? So my total cost, sorry, the sale price would be 24 lakhs 80,000. Here 30 lakhs 90,000. Correct? Here 66 lakhs 75,000. Here 14 plus 2 is 16, plus 2 is 18, plus 20 is 48. One second. 14 to 18 is 38, not 48. So it is 38.63333. Then 50% of this is 19 point. Just cross verify, students. 14.5 plus 2 plus 2.13333 plus 20. This is 38.63. Fine. To 50% is 19.316665. Fine. So my total is 57 lakhs 95,000. Now see the difference, students, that is being created because of change in your approach of charging overheads. So here the cost which I'm getting for the residential project is 30.9 lakhs, whereas this is 24.8 lakhs. Here it is 66.75 lakhs, and here it is 57.95 lakhs. So a better charging of overheads can change your cost structure drastically. So if you compare this, it is having around 20% cost change on the lower side, which is a big difference. And this is where you get the answer for the analytical question, that is C. Now, what is the analytical question? Assuming that the cost of RBC falls by 7% and the price of IPC rises by 2% as a result of change to ABC. Suggest possible pricing strategies for the two services offered by the company. Additionally, suggest two reasons other than high prices for the current poor sales of RBC. Now, firstly, what they are asking you is suggest possible pricing strategy. Now see, this is more of an analytical question, more of a theoretical question. So what are pricing strategies? So pricing strategies are either you adopt a pricing strategy whereby you will quote a lower price, keeping your margin, profit margin very low, or at times even only quoting what is your cost. The purpose is you want to penetrate the market. The purpose is you want to capture the market. That is possible only by giving a lower price. This is the first strategy of pricing. Second pricing strategy could be that where you know that you have monopoly, where you know that you have demand for your product and your company has a great face value, great goodwill in the market, you are definitely going to get the project. In that case, you adopt the second approach, which is skimming pricing. So first is penetration pricing, where you charge lesser price. Skimming pricing is where you charge a premium price. So these are generally the two pricing strategies that are adopted. Now here, depending upon the scenario, which one will you suggest? That is what is the question. Now in case of RBC, the cost is reducing. And anyways, if you see the data, a sentence was given over here that till now, the company is winning only fewer RBC contracts than it expects. Now, since the company is winning fewer RBC contracts, hence, I think we should suggest, because anyways, cost is also reducing, penetration pricing for this project. That is quoting a lower price. Just a minute. So students, for RBC, let us suggest penetration pricing because anyways our cost has reduced. And since we are not getting the projects, penetration pricing will be much better approach. And for the IPC projects where already there is a rise in price and plus because of ABC we are benefited in the form of lesser cost. Here we can explore the option of the other pricing, which is the skimming pricing. That is whereby we do not lower our price, we keep a premium price despite of there being reduction in our cost. So this could be the pricing strategies for the two services offered. And then they have asked you a question where you have to analyze from the given data as to what could be reasons other than high prices for the current poor sales of RBC. Now see, this will be requiring your general knowledge on the subject that why a company may not be getting a project. So there could be one reason, one. Now, see, this is what they are asking other than cost. So, other than cost, what could be the reason for not getting the contract? One, the company's overall image in the market with respect to residential projects may not be that great. Second, the competition in this segment may be very high. That is, there would be many contractor, many construction companies, and because of those companies quoting a more competitive price, our company may not be getting the contracts. This could be second reason. Third reason for this could be that the company is not able to bring out a competitive advantage in the market. So many times in a scenario where there are multiple players, you command a contract or you get the contract where you have a competitive advantage, either in terms of your quality of work or either in terms of your special, let us say you come out with new designs, you come out with new features in your project, some new amenities. Now these things may be lacking. That is, the company may not have a competitive advantage. So these could be the three reasons which you can write here. Though they have asked two, but on the basis of the data, we can make it up into three reasons. Fine. Chalo. Now take a screenshot of this. Now this is again a different type of question than the earlier two. So we are trying to explore all types of questions in cost sheet so that you are prepared for any type of question that you may get in exams. So just take a screenshot of this. Let us proceed. So Luxy is a company into the luxury pen segment, manufacturing 120 pens per batch. Now, to process a single batch of 120 pens, the company incurs following expenditure. So remember, this is expenditure for the batch, and the batch is of 120 pens, direct material, direct wages. Now, this is important. See, this will vary per pen. Why? Because these are direct costs. But this is the batch setup cost. This has no connection with number of pens. Even if you make 200 pens, the cost should remain same. Why? Because this is the batch level cost. So understand the students, in costing, you have cost at the product level, at the batch level, at the facility level, and at the enterprise level. So depending upon that, you have to understand and determine the variability. Now, for each batch, the company absorbs the production overheads at the rate of 120% of direct wages and 15% of total production cost is allocated for covering the other costs. So production overheads 20% and 15% is for your selling, distribution, administration costs. Now, during the month of March, the company received an order for 2,400 pens and the company aims to achieve a profit margin of 25% on the sale price. You are required to determine the sales value of 2,400 pens. Now, as per the data, the company is making 120 pens in a single batch. So it will be having how many batches? 20 batches, correct? Now, what are we supposed to do? We are again supposed to prepare a cost sheet to determine the total sales value. Now for this, we already are given some data of the original cost structure. And since they have already given that their overhead recovery rates are this, and also their profit margin is given. It means we don't have to determine anything from the original data. Now see, compare this with the first sum we solved. In the first sum, we had to prepare the original cost sheet also, and then the new cost sheet for the proposed order. Why? Because they had not given the overhead recovery rates, the profit margin. All things were to be determined by us. So we prepared two cost sheets, original data cost sheet and the proposed new order cost sheet. Here, if you see, there is no such thing. They have already given you the data and the overhead absorption rates, the profit margin, everything is given to you ready. In this case, we need not prepare the first cost sheet for the original data. We can directly prepare the cost sheet for the proposed order. So you have to understand this, students, from the data as to what cost sheets or one cost sheet or multiple cost sheets you need to prepare. So in this sum, we need to prepare only one cost sheet. Correct? My costs are direct material, direct wages, batch setup, and then the overheads. Okay. So it's a question 2, 3, 4. So here our cost sheet is for 2,400 pens and it is for 20 batches. Correct? This will be your prime cost. Then production overheads. This will be your factory cost. Then factory cost plus cost of production both. Then selling, administration, distribution, all these overheads combined. This will be your cost of goods sold or even your total cost. Then to this, we add our desired profit margin. So you get the selling price. Fine, students? Chalo. 5 minutes given to you to try out this question first. So if you have completed, let me solve. So now we were given the material and labor cost, which was pertaining to 120 pence. Now we have the cost sheet to be prepared of 2400 pence. So we'll use this same cost structure to derive cost of 2400 pence. So it is 57375 and 6750. So these are to be converted from 120 pence to 2400 pence, correct? So how much it will be? 57375 divided by 120 multiplied by 2400. So it comes to 11,47,500. Correct, students? Second is 6750 divided by 120 pence multiplied by 2400 pence. So it comes to 1,35,000. Please cross check with your answers. Now, batch setup. This was for one batch, 18,900. Now we are going to have 20 batches. So 18,900 is for one batch multiplied by 20 batches. So how much it comes to, students? It comes to 3,78,000. Correct? So this I add the other cost, 1,35,000, 11,47,500. So it gives me 16,60,500. Now, how you have to charge production overheads? They have already given you the rate, 20% of wages. So it will be, wages is how much? 1,35,000 into 20%, correct? So how much it comes to, students? It comes to 27,000. So how much? 87,500. Now, selling, distribution, administration is 15% of production cost. So how much it will come to? 1687,500 into some 15%. So it comes to 253,125. So it is 1940. Correct. Now, what is your expected profit? 25% on its sales value. Okay. So 25% is how much, students? It is 1/4. Now it is 1/4 of sales. So it becomes 1/3 of cost, correct? So it comes to 6,46,875. Right, students? 1940. So the price which I am getting is 25,87,500. Correct? Yes, perfect. So students, this is the final answer. I'm sure you would have got similar answer. Correct? Fine. Next sum, but now we'll take a break. Again, this is a different type of sum. This is somewhat mathematical sum where we will be using some mathematical calculation to determine the cost. But now we'll take our 15 minutes break. And in the meantime, if you complete your break early, you start solving this. Fine. Now, students, in this sum, you need to be very clear. Can you post that question here? Because I'm not having that handy. If you can post it here, definitely I'll take up that question, Bida. Vidushi, can you just post that here? I'll take up your query. So, now in this, students, language is the key. What it says, Bata company is manufacturing two different types of shoe, A and B. A production cost for the whole year is direct material, direct labor, overheads. Now, this is for the company as a whole, not for a particular shoe. There is no WIP. That is good. Now comes the word adjustment where we will be requiring some mathematics. It is ascertained that the direct material per unit, not total, for type A is twice that of type B. So for material, the language says that type A shoes require material which is twice that of type B. Direct wages again per unit of type B is 60% of A. Again, both the adjustments of material and labor are per unit, not total. So be clear because that is going to be the key when we are solving. Production overheads were same per pair. Administration overheads, which is related to production, is 150% of wages. Selling is 1.5 per pair. Production during the year is this. For A, 40,000, but sale is 36. For B, 120, but the sale is 100. Selling price is 44 and 28. You are determined to prepare a statement showing cost and profit. Now again, this is different from the previous three sums we solved. See, format students broadly may be same, but you have to modify product A and B. So particulars A, B. So I'm writing firstly the production units. For A, it is 40,000. For B, it is 1,20,000. Right, students? Now, direct material prime cost. Production overheads. Related to production. So this will be your cost of production. Correct? To this we add distribution. You get no, sorry. Here you have opening, closing WIP, finished goods. So cost goods sold. Selling and distribution. Cost of sales, profit, sales. Now, but Vidushi, please in the meantime, if you can arrange the photo of that or the link for that, then immediately after this sum, I'll take up your query. So that will also be solved. Now, we will require some calculations, students, because of the language adjustment given. That we'll do by way of working out. So first working note is calculation of so what is given? See, they say, now this is the first adjustment, direct material per unit of A is twice as much as that of B. Correct? Excellent, Vidushi beta. Let me complete this. I'll take up this also. So direct material of A is twice as much is used in B. So simple maths, let direct material per unit for B shoes BX. Therefore, direct material per unit for A shoe will be how much? 2x because A is twice of B. Now, total material cost is equal to material cost of A plus material cost of B. Right, students? Now, how much is the total material cost given for the year? 15 lakhs. So this is 15 lakhs. Material cost of A is 40,000 units into 2x. So 40,000. B is 120 into x. So it is plus 120x. So 2 lakh x. Therefore, x is how much? 7.5, which is direct material cost per unit of B shoes, correct? And therefore, 2x will be how much? 15, which will be direct material per unit of A shoes, correct? Total direct material cost will be A 40,000 units into 15, 6 lakhs of B into 7.5. Correct. So 6 lakhs, 9 lakhs. Correct, students? Same lines, we do the working for now. Now, for labor, what is given, students? See, the direct wages per unit of B is 60% of A. So here I'm assuming A per unit to be X. Therefore, direct labor per unit for B shoe will be how much? 0.6x. correct? Now total labor cost is equal to labor cost of A plus labor cost of B, correct? How much is total labor cost, students? 840. Now, A is 40,000 units into per unit. B is 1,20,000 units into 0.6. 40,000 x, 12 6 are 72, so 72,000 x. Therefore, 840 is equal to, therefore x is how much? It will be 840 divided by 112, 7.5, which will be direct labor per unit of A type shoe. And then 0.6x will be how much? It will be 4.5, which will be direct labor per unit of B type shoe. Total direct labor cost for A, 40,000 units of A into 7.5, and similarly for B, 1,20,000 units, 4.5, correct? So this comes to, students, 5,40,000. This will come to 3 lakhs. So 3 lakhs and 540. So now we can proceed. 9 lakhs, 1440. Right, students? Now, production was same per pair. So per unit production is same. Now total production is 360. So working note B, calculation of production overheads. Now production overheads per unit. It is 360, which is total upon total of both the products, because per unit it is same. So it will be 360 upon 160, correct? 360, 160. So 2.25 per units. Therefore, total production overheads for A and for B, how much it will be? So for A, it will be 40,000 units. And for B, it will be 1,20,000. So 240. So it comes to 90,000 students. So 90 to 70. So I get 990, 70, 10. Correct? Now what about administration, students? What is given for administration? For each type is 150% of wages. Correct? Correct. So administration overheads is 150 of wages. Okay. So I have to take 150% multiplied by direct wages. Now, if direct wages is 3 lakhs, So it is 3 lakhs into 150%, and here it is 5.4 lakhs. 150% of students, 3 lakhs is 450, and of 540 will be, please cross check students. Yes. So it will be 1440. Correct? Now comes the adjustment. What is this adjustment? It is given that you have produced 40,000 of A but sold 36,000. And similarly, you have produced 120 of B but sold only 1 lakh. Now, there is nothing given of opening stock, so I put dash, but definitely there is something in closing stock. And since there is something in closing stock, we have to do valuation of, now we first find out cost per unit, which is total cost of production upon units produced. Now for A, what is total cost of production? 1440. How much is units produced of A? 40,000. So I get cost per unit. How much it comes to students? So 1440 divided by 40, it gives me 36 per unit. So now I can find out the value. Closing stock value. Closing stock units are 4,000 into 36, correct? So I get 1,44,000 here. And it will be minus because closing stock is subtract. Same lines for B. What is cost of production? 2520 divided by 1,20,000 units. 21 rupees per unit. And so closing stock value of B will be, now out of 120 I've sold 1 lakh. So 20,000 is your stock into 21. 6th. 420 into, correct? So coming back, this will be 1296. This will be 21. Selling price, no, selling cost. Selling cost is 1.5 per pair. So it will be units sold multiplied by rupees 1.5, correct? 1.5. Yes. Now, how many units are sold? 36,000 units are sold into 1.5. 1 lakh units are sold. It is 1,50,000. So this will be 1350. This will be 2250. And now finally sales, which is unit sold into selling price. 36,000 units into and 1 lakh into. So 44 for A, 28 for B. 28. So this is 28 lakhs. 36 into 44. It's 1584. So profit is your balancing figure. So it comes to how much? 234 here and 2550 here. So students, this is how you get the answer. So this is the complete answer for this cost sheet sum. You may take a screenshot in case you feel that you need to keep a track of this. I'll now go to the question which Vidushi has placed. You're asking MCQ question. Okay, I'm clicking on this, beta Vidushi. Why it is not opening? Why it is not opening? Do I need to checklist it? Is it opened? So in this, which question, Vidushi? I hope now this question paper is visible. You're asking which question, beta? This one, Vidushi? Is this the question you're asking, Vidushi? Vidushi, but are you there? Will you unmute so that we can have a direct interaction, which will be more easy for communication? So kindly unmute and ask your question, beta.
Yes, sir.
Please tell me.
So actually, I would like you to solve this question for me.
Correct.
I have basic doubts and I was not able to solve it earlier. Some of the answers were not matching.
No, but from where did you check the answers? Such a from the I think answers
No,
also host.
I didn't match anywhere.
No, but better than if you would have matched, no, it would have been
But
easier.
actually, s- uh, my
Hmm.
prime cost was not even some of my answers were not even there. They were
No,
not
beta.
even
So
matching in the A B C D column.
understood. So beta, at such time you should first check the answer on the portal. What happens many times, it may happen that only one or two figure here and there is missing, correct? If you have not taken those figures, then the answer will not match. Because for getting answer now, I'll have to first solve the complete sum. And it may take some time because the data is given scattered, like stocks are given here. Then some data are receipt on sale of scrap, salary bonus, marketing staff, general manager, depreciation of this building. So the data is very scattered. Okay, let's see if we can do something orally. So what are the questions? First question is, what is the direct employee cost? So we have to find out labor cost. Was it matching or is it also not matching, beta? Direct employee is matching or not matching, beta? Vidushi, please remain unmuted, beta, so that our discussion can be fruitful.
Yes, sir, it was matching.
Okay. Then prime cost.
Yes, sir.
Factory cost?
No, sir.
Okay. So what was your prime cost, beta? Let me just
So
take the figures so that,
right now I'm not having my solution.
beta,
That
don't.
is why I was asking you to do it full.
But then see, frankly speaking, the time is short. We will not be able to complete the sum then if I have to solve the complete sum. If you would have by chance carried your answer, it would have been much easier. No? We could have started from prime cost. To that extent, it would have been much proper, na, beta?
Yes, sir.
Because now locating figures, doing it will take a lot
But
of
I'm
time.
finding, but I'm not able to exactly find the page where I did
We
it.
do one thing, na. Do you have the answer support available on the portal? I think that can be searched faster. Maybe in
Sir,
your
I
book, if
don't know
not.
where to find the answers.
It is also hosted, beta. See, the question papers and answers both are hosted, beta.
Okay, sir.
Hmm,
So everything is like solved there.
I don't know, beta. I haven't seen because I haven't referred to the latest answer paper. Means whether they solve and give it or they only give ABC markings. But I believe it should be solved for your reference. This is, I assume, but I don't know. See, this will be part of prime cost, correct?
Yes,
And
sir.
then the raw material consumed, which you have taken, repairs, maintenance,
So we
insurance.
can, what we can do right now, we can just make classification. That will be like very much easier for me to solve it again.
Nee, that is correct. So see, I am making the classification. This will be part of raw material consumed,
Yes,
correct?
sir.
Raw material purchases are this. How much it comes to? 15, 15 threes are 45. So it comes to, I think, 45 lakhs, correct? Plus you have to add 4% of
Yes, sir.
cost of raw material purchase. So plus you'll have to add 4% towards freight inwards. So see,
So
in
that would
RMC,
be 4680,000.
so 4680.
Yeah.
So minus 10, minus 110 plus 5. So in short, it is plus 390 net. 46 and 390 is 5070. Where is prime cost given? Not given. So I think I'm getting RMC as 5070. How? This is
Yes, sir.
material purchased plus opening minus closing. Is it 5070?
Yes, sir.
Okay. How much is wages? 30%. So you'll get direct wages. Take 30% of this, which will be 15, 7 threes are 21. So 16,
1521.
nice. 1521, na?
Yes, sir.
So 1521, sorry. So this answer is matching, correct?
Yes, sir.
Now RMC plus direct wages plus royalty, where was it here? 776, 400.
Yes, sir.
776, 400 royalty. 776, 400. You add up all this, you get your prime cost. How much it works out to?
73,67,400. 73
70.
lakh 63 67,400.
Correct. Match it. Not matching. Are we missing out any other costs? Receipt on wage generated during production, salary bonus, salary general manager, R&D, insurance, office building,
The
packing costs
amount
for it.
paid for power and fuel.
But a power and fuel is factory overheads. This is royalty for production, 776, 400. Are you sure with the calculation? No?
Yes, sir.
Because anyway, see, direct wages has matched, but again, whether this answer is correct, how do we know this answer is correct? Because if any of our workings are wrong, then it may be a challenge. So if one figure wrong, everything will go haywire. Mm. General manager office building, improvement in production process, premium paid.
Sir,
Accounted for.
employee cost,
Tell me,
sir, bonus.
where is bonus? If bonus is there of direct workers, you should consider, but where is bonus? But this is of sales, na, beta. It is not of direct workers.
Okay, sir.
It is salary and bonus both. This will come in selling overheads. Okay, chalo, I'll give you classification. So this will go to factory overheads. Packing cost will go to distribution overheads. Repairs maintenance, this will go to factory overheads. This will go to selling and distribution overheads. Correct?
Yes, sir.
Insurance paid for plant and machinery, again factory overheads.
Factory.
R&D, this will come after you find out factory cost. So in factory cost, you add this to get
Yes,
your
sir.
cost of production. Then depreciation office building will be administration overheads. Salary paid to general manager is again administration overheads, and these are general administration, not
Yes, sir.
administration related to production. These are general. Then sales and marketing staff is selling and distribution overheads. This will be subtracted
After
half
factory cost.
factory cost. Correct? Very good.
Yes, sir.
Then this is RMC. This will be after factory overheads. You add this to find out factory cost. This is again after factory overheads. You subtract this to find out factory cost. And this will be after cost of production. You will add. This will be after cost of production. You will subtract. Correct?
Yes, sir.
Now wages done. Closing finished goods. So values are given.
So, there is a
Tell me.
request. Can you just please like solve it next time? Because I'm also getting wrong answers and which are not even matching from the MCQ answers.
No problem, beta. So actually, right now, I was not knowing that this will be the situation. Otherwise, instead of solving my sum, I would have solved this sum complete. Uh, anyways, maybe in the next session we can take it up. Or in the
Okay.
meantime, if by chance you get the answers hosted, na, maybe because see, there is mistake only in one figure somewhere, right? If that one figure is resolved, now all answers will start falling in place. See, this is the disadvantage of MCQ. Because even if one answer is wrong, all other answers, because we have only one option to take, right? And if one answer does not match, no option will match. Are you getting this point?
Yes, sir.
Okay. So definitely I'll take up this some beta. Fine, in the next
Okay.
class. Okay then. But in the meantime, beta, try to locate this, because if you get it, maybe you will get the answer yourself. If not, I'll definitely solve it for you.
Okay, sir. Sure.
Chalo then. Thank you. Thank you very much. We
Thank
connect in
you.
the next class with more questions. You all can come up with your doubts. That would be much better, right? So good day, everyone. Take care.